While some called it a make-or-break budget for the Narendra Modi government, others termed it as a stimulus budget after the demonetisation drive. Now that the budget is out, the big question is how far has the Finance Minister Arun Jaitley been able to live up to the expectations of the people? Also, whether the measures taken by him will lead to higher spending and growth. To answer some of these questions, we have with us Mr. Vivek Gupta, who is partner at BMR Advisors, and he looks after mergers and acquisitions practices. Thank you, Mr. Gupta, for joining us. So what's your first impression after the budget?
So overall, I think this is a budget which was very widely, which is largely on expected lines. Yesterday's economic survey had indicated a certain direction in which the budget had to go. There was very limited fiscal headroom that was available to the government, and once Mr. Jaitley announced that he will stick to the fiscal deficit target, it was quite clear that no big tax giveaway was in the offing. The economic survey had recognized the fact that this year there are many one-time windfall items for the government insofar as the revenue is concerned. There's the higher excise duty on petroleum products. There's the money that has come in through the demonetisation, voluntary disclosure scheme, and so on and so forth. And therefore, these are items that will not be repeated next year. Bear in mind also that next year is a year where GST will come into play. So in the first year of GST, given all the teething trouble that one could expect with such a widespread change, it would be reasonable to expect that revenues might be slightly lower in the indirect tax front too. So with all these constraints, the government has prioritized and sequenced spending as opposed to tax giveaways, and spending in order to perhaps impart some of the growth impulses that demonetisation took away from the economy.
There has been some slowdown in the economic activity, as you mentioned, after demonetisation. So, has the budget provided a clear roadmap ahead?
So I think the budget has very clearly prioritized the fact that there will be huge amounts of spending by this government. So we have never seen figures of this nature being committed for public spending, whether it's on the capex side or it's on the revenue side. So the government has committed huge amounts of money for rural spends, for infrastructure, for railways, and so on and so forth. So I think what the government wants to do is to create a cycle of government-led spending, which in turn will increase consumption, which in turn will then kickstart all of the private sector investment too. So the government seems to be banking on this huge spending push to get over the demonetisation growth depression.
Okay, so you deal with both buy side and the sale side. So do you think this budget will be able to woo more investors?
So look, wooing investors is what you're doing with the ecosystem. I don't think one single budget is a budget for either wooing investors or not wooing investors. Of course, from a public market standpoint, the fact that capital gains has not been changed, the fact that on indirect transfers, FPIs have been given the relief that they wanted. So I think those are all positive steps. There are no negative surprises for investors in this budget, which would mean that investors who want to take part in the India growth story would come in as they would have originally come in, without the overhang of any negative surprise from this budget. Overall, ease of doing business is the direction that the government is going in for. And I think so long as that remains a hallmark of this government's policies at an overall level, investors would be available for and help both buy side and sell side deals.
The finance minister has given a 5% tax rebate to the small companies. Now the big companies were also asking for lowering the corporate taxes. So what do you make of this budget?
Yes, and the CII also asked, in fact CII asked for 18% tax rate with no deductions, with no exemptions. Look, the government is committed to reducing corporate tax rate to 25% over 5 years originally. So there are 2 more years within which corporate tax rate as a whole, the government is to come good on its promise, has to come down to 25%. I think the fact that only MSMEs have been given this benefit right now is purely a function of the fiscal room available with this government. They just did not have the room to cut corporate tax rates for larger corporates, even 1%, and therefore they didn't. That's a function of the prioritization, the sequence of actions that a government has the prerogative to choose. They chose investment over tax cuts, but still they wanted to create some bit of feel-good factor. I think MSMEs have also been most impacted by demonetisation, and therefore wanted to give them some relief. So, in a sense, I see that for companies with turnover of below 50 crores, they merely advanced what they would in any case have done within the next 2 years to now. That's it.
Sir, the finance minister has given 5% rebate on the lowest income bracket group, but he hasn't changed the slabs. So what's your comment on this?
I think he was very clear on why he's not changing the slabs. He read out a load of statistics, and I have never sseen a finance minister do that as part of the budget speech to demonstrate how non-compliant we are as a society. I think he was indirectly saying that if we were to change the basic exemption limit from 2.5 to 3.5 lakhs, let's say, or to 5 lakhs, as was the demand in some quarters, then what is essentially going to happen is that a large number of people are going to go out of the tax net. So he did still give you some monetary relief, but he does not want people to get out of the tax net per se. In fact, on the contrary, he's made it easier for you to come into the tax net by saying that your first year return will not be scrutinized, by saying that you will have a Saral type one-page form, and so on and so forth.
Sir, fiscal deficit target is 3.2% of the GDP. What do you make of that? Can we, considering what the fiscal situation is right now, will the government be able to retain the target?
Yes, I think so. I think that I think it's very good that the government has gone with the recommendations of the FRBM committee. Not only have they committed to a 3.2% fiscal deficit, they have also said that they will maintain debt to GDP of 60%, 40% for the centre, 20% for the state. So I think both these markers are very useful markers. These are markers that the foreign investor community sees very carefully. These are markers that will also enhance our sovereign rating over a period of time. So the fact that they've committed and stuck to this fiscal deficit target is a positive. Now, in terms of whether it will actually pan out, I think the government has enough levers at play such that unless something drastic happens in the world economy, like oil going through the roof or something like that, I think they would be able to stick to this, which is also the reason why they could not do anything on MAT, they could not do anything on DDT, they could not do anything on the corporate tax rate, although they made all the right noises about it, but they fundamentally did not give any great relief. Another mode of tax revenue measure that they have put into this budget is that for people with incomes above 50 lakhs and up to 1 crore, they're putting an additional surcharge of 10%, as opposed to earlier only a 15% surcharge for incomes above 1 crore. So I think the government has been smart, made the right noises insofar as taxes are concerned, but not really compromised its position on taxes in any meaningful fashion.
What are the missed opportunities in this budget?
So I think for me, the most important factor is the entire factor of jobs creation. The fact is that the government is strongly trying to push the economy from an unorganized to an organized sector. And in every which way, right? Digital payments, stopping cash payments above 10,000 from a deduction exemption standpoint, penalizing cash payments above 3 lakh rupees under the Income Tax Act. So the government wants every industry, every initiative, every business to become more organized. Rupee for rupee, an organized business is less labor intensive as compared to an unorganized business. Unorganized business has more people doing the same task. With the kind of demographics that India has, I think job creation needs to be a very, very big objective of this government. Spending will, of course, create jobs in the economy, but I think that tax incentives for industries which do job creation are perhaps essential to kickstart this, to push this process even further.
If we were to rate this budget on a scale of 1 to 10, how would you rate it?
Well, that's really tough. I would say it's a balanced budget. It's a budget for continuance. it's a budget with a certain sequence and of action steps and prioritization that the government has done. The biggest positive in this budget is that there is no shock and awe in this budget. It's a budget for continuance, and therefore overall I view this as more a positive than a negative budget.
All right, Mr. Gupta. Thank you for giving us a sense of the budget. Stay tuned for more updates on InfraCircle.